The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you very much for being with us today. And it's good morning to our friends in Queensland. Good afternoon to the rest of this great country, and also good afternoon to our friends across the ditch in Queensland. Great to have you all with us. How's the volume, folks? Would somebody please just type in the question box that you can hear me all right? That'd be a great help. Hello. Good. Sue, up in Cairns, all the way from Cairns. Aren't you lovely? Thank you, Sue. That's great. And, of course, my old friend Hank, grandfather of the year down in the Hunter, Pine, thank you for that. And Peter Kay, the short-term trading king, who's actually doing a Daniel Code tutorial at the moment. Do let me know when you're ready for our next session, Peter, won't you? Okay, so Adrian, he's a tutorial guy down in Adelaide. Great to have you with us, my friend. Albert, of course, he's a tutorial guy. Sim, up in Kuala Lumpur, and hopefully Peck Sim as well, the lovely Peck Sim. That's great to have you with us. David, Carol, great to have you, Carol. I always particularly welcome ladies. We don't have many of them, but we very much value them, and we should have a whole lot more. David, of course, Gary, George, Graham over in New Zealand, mate. I hope we're going to get the fractions under control, because you can just use the decimals, mate, can't you? Greg, he's a money manager in Colorado Springs. Greetings, Greg. He's going to start doing a Daniel Code tutorial next week. Hank, of course, as I said, grandfather of the year. Jeff's with us. Jim, Kate, gosh, great to hear from you, mate. Jim's been very ill. He's a tutorial guy and a very keen market thinker. Very much so, and he's been very ill, so it's glad to have you back with us. Justin, of course, that's the father of the year, Hank's son. Good to have you. Mark L., my old stalwart, he's always with us. Most of you are, actually. Michael Murph, of course, he's a perennial. Milton, Nathan, Parmajet, welcome. Great to have you with us. Many of our Peters are here. Sue, of course, up in Cairns. And Toddy over in Southern California. Great to have you with us, mate. Hope your family's all well. And Trevor, of course. Grand, folks, isn't it? So let's, the appropriate time has come. Let us move on. Today we're going to talk about an interesting, I hope you'll find it interesting, an interesting market analysis that I want to share with you, because it's something I've been trying to do for years, literally, and I think we have the solution. If not, we're very, very close to it at least. I can't let this occasion go without talking about this COVID business. On Tuesday night, in the great state of Queensland, where I live, we had at Brisbane, the capital of the state, we had the Rugby League State of Origin match. Rugby League's a form of Australian football, for those of you who are not aware of it. But the highlight was that we had about 52,000 people at Suncorp Stadium, the house full sign for the first time anywhere in a big sporting event since this rotten COVID-19 struck. And it was amazing to see almost 50,000 people sitting there enjoying themselves, yelling their lungs out, no masks, no social distancing. The state's been able to do that because we've been COVID-free in this state for about 3 or 4 months now. Long time anyway. Of the other states, we've seen an extraordinary event in the state of Victoria where their initial quarantine got a bit out of control. I've told you about that before, with the people supposed to be monitoring the quarantine getting a bit too friendly with some of the returned travellers and getting themselves infected and taking that home to their families and spreading it everywhere. But they had a horrendous second wave breakout, and it's under control. They've now been totally COVID-free for about 18 or 19 days. And we've had a breakout in South Australia. Same thing, somebody, a returned traveller in quarantine, had contact. Not with anyone, it was, they think it's just simply from a surface. It was a office worker who was doing office work in one of these quarantine hotels, and she had no personal contact with either the supervisors or the clients in there, if you want to call them clients, and she picked it up. No one knows where, but thinks it was a particle on a surface, either a book or a desktop or something. But basically, I know the States and UK and most of our friends there and in Europe are having a terrible, terrible time with this rotten virus. And in Australia and New Zealand, we're virtually free of it. We've got that one local outbreak, as I said, in South Australia, which they're rapidly getting under control. But the other, all of the other states are absolutely COVID-free. So two things. It's been much easier, of course, for Australia and New Zealand. They're both islands, and it's pretty easy to close off the incoming travellers, which has been the main and prevalent source of this rotten virus. So because we've been able to close off the whole country, and internally, internally the states have variously made their own arrangements to close down state borders. But I did read an article only a couple of days ago saying quarantine doesn't work in subduing this virus. And of course we get Fox and CNN over here, so Fox seemed to have an unlimited supply of people to say the virus can't be controlled by quarantine. And the story that I read was that the US Army had done a trial of some new recruits, divide them into a group that had strict quarantine measures, and didn't show any noticeable change in the pattern of infection. But what they've missed there is that group was having up to 200 people together in their mess hall every day. So that's not real quarantine. And what's been happening in this country, and I'm very aware of it because my daughter, Bodhi, has been in Sydney, which is still notified by the Queensland government as a hotspot. And if you want to come into Queensland, you have to do 14 days in quarantine, paid for at your own expense. Now, the local version of quarantine in this state and all of the other states is that you're put into a hotel that's nominated as a quarantine position, and it's supervised by the Australian Army and the various state police forces. And the state governments and the federal governments, they've all passed legislation to give police the power to enforce the quarantine. And if you try to cross the border and make a false declaration, you have to have a document to move past the borders. It starts off at about a $1,200 fine. If you keep doing it or repeat, the fines go all the way up to $65,000. And it's a pretty fair incentive to behave yourself. And of course, once you're in one of these quarantine hotels, that's it. As I say, they're being managed now by the Australian Army and the police, and they're not mucking around you. Go into your room and you stay there. And you can come out after 14 days and you're tested while it's going on. But that quarantine, does it work? Absolutely it works. But it's pretty draconian, and it's something that Americans wouldn't accept. They're very much, you people being most of my clients, incidentally, in the States, are very invested in their ideas of liberty and freedom, as we are, but we just don't seem to be so hot about it. There's a few people who saying they just won't accept it, and the police pick them up. And if they don't respond to the police directions, they get locked up for a little while. So the incentive is to behave. And I've got to say, it's been an incredible effort, absolutely incredible, that we're now in a situation where we have been, in my state at least, and Western Australia, and Northern Territory. South Australia's got a blip now, but they've had a long period of being totally COVID-free, and it's been a very, very successful exercise. What's the cost? Well, the cost of all these sorts of things are absolutely tremendous. The sheer cost of government providing funds for people who can't go to work. Every state had a period of total lockdown for at least 2 weeks where you couldn't go to work unless you're an essential worker. And the government made funds available to those people, very generous level of funds too. In fact, it's so generous that businesses complaining they can't get workers because they're getting more money sitting at home getting their JobKeeper allowance than they'd get if they went back to work. So that's where we are. It's extraordinary how different the experiences have been. I'm just dreadful to hear about what's happening in other places of the world. It's a terrible thing. Anyway, the blindingly good news is that a couple of viruses, a couple of vaccines at least look to be highly successful. It's going to take a whole lot of time, let me tell you, before that everyone is inoculated. And for this country, at least, we are not going to be able to have international travel for at least the whole of next year. So it's still going to be a massive issue, and other countries that are less fortunate are going to be in awful strife, as they are already. There we are. So Hank says the result was absolutely marvelous. Anyway, let's go on and see if I can tempt you into thinking about this issue today. So if you're creating any sort of a study for your charts, then any line on a chart other than a horizontal line will have elements of time. Any angle has elements of time. Any tool tracking highs and lows or moving ranges has elements of time in it. And that's a pretty important idea. So how do we get to this situation about our understanding of time that's here, us at the Daniel Code? Well, one of the earliest measurements of a defining period of time comes in about 600 BC from a recorded writing in the Old Testament book of Daniel. Now, I know the minute that you say Bible, Old Testament, New Testament, people get, some of them get very upset about that. But you don't have to believe that, because how we use the measurements of time is that we use nothing but pure math. So modern scholars, according to Wikipedia, hold that Daniel never existed, and that the book was written in the 2nd or 3rd century BC, and it's a collection basically of Jewish oral history and morality plays. Now, what I'm talking about is the biblical record of Daniel about 4 centuries earlier than that. But of course, none of the wiki scholars know about Daniel's measurement of time. So you're quite free to believe the wiki version, or you can think and make your own conclusions. I'll see if I can lead you to something that'll get you thinking about time in markets, because it's so important. When I first discovered the Daniel Code, it was only price. It was all price, price, price. And it took me a considerable number of years. That took me 7 years of 100-hour-a-week. And if I'm exaggerating, let me tell you, it's only very slightly. It was an extraordinary obsession that I had. And eventually I started to discover the Daniel Code based on price. And it was many years after that, in fact, only perhaps 4 years ago, that I started to understand that price and time are the same thing on different axes. So 1 + 1 = 2. And what I'm going to tell you about the small part of the book of Daniel is basically math. And it makes no difference to me what your personal belief system is. If you believe that 1 and 1 = 2, we will all reach the same conclusion. So the Daniel Code is based obviously on the written record in part of the book of Daniel. Now, I like to argue that one can't extend from the micro to the mega, or the macro, if you like. Maybe better not to use that word mega at the moment. I've upset a whole lot of people. Mega, I should say. And boy, oh boy, I don't know if you all saw poor old report on poor old Rudy Giuliani this morning in his latest court appearance. But he must have been pretty warm where he was, and he got very sweaty. And his hair dye started running down his face. I mean, God bless him. Anyway, good for him. The Daniel Code is based on the written record in a small part of the book of Daniel. And I don't make claims about the rest of the book of Daniel. It is a book, supposedly, it's a book of prophecy. And a lot of it is very, very obscure, opaque. The problem that Rudy had in his first court appearance 2 days ago, he had to ask the judge what opaque meant. And it was the opposite of what he thought. But anyway. He's been a great servant to your nation over the many years, hasn't he? So this particular part, which is chapter 12, and only chapter 12 of the book of Daniel, it gives us these hidden numbers that on their own are quite innocuous. They don't seem to have any particular meaning, but if you understand the Daniel Code, and the first thing I do with any of my clients who are doing a Daniel Code tutorial is I say to them, look, there are two forms of knowledge that are generally accepted. One is I read about this in an authoritative book, or somebody in an authoritative position told me, and I believe it to be true. That's version one. The much better version is I believe this to be true because I proved it for myself. And the first lesson that everybody doing a Daniel Code tutorial gets is I take them through the math involved behind the book of Daniel, the hidden meaning of those numbers, and I get them to go on the same journey of discovery that I went on. Now, it took me probably 2 or 3 years of hard thinking and failure, and then seriously 7 years of almost full-time research before I got the message that is now the basis of the Daniel Code. And you will do that in about an hour and a half, what took me all those years, because I'll give you the shortcuts. But in the chapter 12 of the book of Daniel, Daniel has a vision, and he's instructed to write down what he sees and hears, and then to seal the book. So this is the start of end-time prophecy, which excites a whole lot of folks, particularly charismatic churches all over the world are very invested in end-time prophecy. So please understand that I am using this extract from the Bible in a purely mathematical sense. So please don't start writing to me about your version of end-time prophecy or mine. It's all too peripheral to trading. And a significant reason why religion in the Western world has fallen into disrepute is the propensity of folks to believe that they have special insights into biblical teachings and to present these perceived insights as facts. And when I first started the Daniel Code, I was absolutely inundated for probably 9 months to a year with hate mail. And if you mention the word Bible, a large number of people get upset. If you say God, it's worse. If you say Jesus, it's the end of the world. And I was inundated with hate mail for a long, long time. Anyway, that's not what's happening here. We're simply talking about numbers. And numbers, of course, are the universal language. It's the only thing on which we all agree. And even where you see the divisions between Republicans and Democrats over the recent U.S. election, even though they can't agree on much, they all agree that 1 and 1 equals 2. So it's what I call it is God's language, but it's the universal language. Numbers are the same everywhere in the world. 1 and 1 equals 2 everywhere in the world, regardless of race, creed, or anything else. And if we're going to talk about the book of Daniel, which I do incessantly, as you know, it's interesting if you understand a bit what Sir Isaac Newton had to say about it. So Newton, you can read this in your as I'm talking to you, but basically, for those of you not familiar, he's usually called the father of modern science, and he basically invented the laws of gravity, relativity, and of course the apple falling from the tree, the great understanding of gravity, and much more than that, he developed infinitesimal calculus, classical mechanics, optics, all sorts of things. So in Principi, that's the book, is a great mathematical work. He demonstrates all sorts of things, including that the motion of objects on Earth and celestial bodies could be accounted for by the same principles. Now, that sounds everyday to us, but remember, in those days, we're talking about the 1600s into the early 1700s. It was just one of the outstanding mental feats in our history. Very important because you can see he built the first reflecting telescope, did all sorts of amazing things with optics, wrote a book on optics. And what a distinguished man. He finished up being a parliamentarian. He was the professor, Lucasian professor of mathematics at the University of Cambridge. At about, if my mind doesn't fail me, he was about 24 years old. Extraordinary. And he spent all sorts of his life serving the community as warden and master of the Royal Mint, and of course president of the Royal Society, which is the leading influential mathematics and type of studies in Britain. So Newton, of course, was, well, I shouldn't say of course, it's not quite the way you think it. Newton wrote at length. He was a committed Christian, but he was what's called an Arian. He didn't believe in the Trinity, the idea that God, the Father, the Son, the Holy Ghost, 3 in 1. He didn't believe in any of that, and he was quite pointed about it and said that none of that was in the Bible. It was a construct, more or less formed at the Convention of Constantinople, and which was three centuries after the death of Jesus. But this he wrote this incredible thesis about the book of Daniel. And it's called Observations on Daniel and the Apocalypse of St. John. And it's published by Project Gutenberg It's free on the internet. If you have time, download it and look at it. It's a PDF, easy to get. Just search Newton, Observations on the Prophecies of Daniel and the Apocalypse of St. John. And I don't think you'll read it all, but you should at least skim through it, I should say. It's very hard to read. It's all time cycles. And Newton, of course, was particularly interested in the 70 time cycle, the 70 weeks, and he used those numbers in the book of Daniel. He said the book of Daniel is the most important book in the Bible because it foretells the coming of the Messiah, which is what he was interested in. He gave a very prescient warning that I've repeated for you here, and it's on our website. It says, the design of God was much otherwise. He gave this and the prophecies of the Old Testament not to gratify men's curiosities by enabling them to foreknow things, but that after they were fulfilled they might be interpreted by the event and his own providence, not the interpreters. That's a bit of old-fashioned language, but it makes it pretty clear, doesn't it? For the event of things predicted many ages before will then be a convincing argument that the world is governed by providence. Providence here is used in the Old English sense of the word of God. His observations on this whole thing is that numerology and what sometimes Jewish people call the Kabbalah, the use of numbers to interpret other events. Newton got very much into that. I must say, I don't follow all of his calculations, and for some of them, I'm just mute on what they mean. But it's an amazing piece of work. You should at least have a look at it. But anyway, let's move on to what we're interested in. From chapter 12 of the book of Daniel, we get two important numbers, 1290 and 1335. So why are these numbers so important? Well, you look at them, they seem to be random numbers, and that's the face value of them on the reading of the book of Daniel. They both have 5 as a fractal, or a fraction if you prefer. Why is that? Well, for those of you who've done a tutorial and understand, those two numbers, using just very simple mathematics, give us all of the Daniel code ratios which control all markets in time and price. The major sequences of the Daniel code numbers is what we use for forecasting major time turns. What's going on all the time in the fourth seal with Frank DB, who's not only having a marvelous trot, but I have to say again, go to the Daniel Code website, click on the tab that says Articles, and you'll find 70 or 80 of my published articles there. But more interestingly, in terms of current events, there's an article there right at the top, and it's simply called 2019. And that's an article that Frank DB wrote for the fourth seal in December 2019. And what it says, for those of you who don't make the effort to go and look at it, is that we will be in a bull market based on the Daniel Code 4th seal until sometime early or mid 2021. Now, he was writing that in 2019. Who is Frank DB? He's a young man from Belgium who came to me at a Daniel Code tutorial in Taupo, New Zealand in 2011. Lovely young man. He's actually a farmer. He came out to Taupo and brought his then fiancée, Anne. She was with him. They're now married, have 2 beautiful children. He said, I've never looked at a financial chart in my life. I've never read a financial paper in my life. but I've been following your writing. I used to write articles for Financial Sense and for Forex Journal and a couple of those sorts of publications. And he said, I love your writing. I want to know more about what you're talking about. He went from being a young man who'd never ever seen a trading chart, didn't know what the securities were, knew absolutely nothing about it. I mean, absolutely, literally zero. And that was the first tutorial at which I taught the fourth seal. And that's something that Frank latched onto and made it his specialty. And he actually writes the fourth seal reports for us now. And he's very, very good. But, you know, even when we had the big 22-day flash crash in February of this year, he wrote in the Fourth Seal commentary, which is in the Daniel Code website every week. While that was going, in the middle of all that, he said, I know it might sound crazy to say it now, but I stick to the forecast, which is that we'll have new highs in these markets, equities markets he's talking about, into 2021. Well, I mean, what a gutsy call. And so far, he's right. So perhaps you should be thinking about the rest of what he wrote in that article. Anyway, back in the day, W.D. Gann, the legendary W.D. Gann, used to say, if you are worthy, I will tell you the number. And he'd then tell you if you were worthy, which was usually buying his courses equal to about the cost of 2 new Buicks back in the day. He'd tell you the number was 7, which it's not. The number, of course, is 6. And that reference from Gann to 7 has perplexed all the Gann traders, Gann aficionados, for decades. But we know from those same numbers, 1290 and 1335, we not only get all of the Daniel Code ratios, but we also get the minor ratio, which is 6.21. And we get a whole lot else as well. For those of you who've done a tutorial and those of you who think about this stuff, it actually, the numbers involved are quite extraordinary about all sorts of things, nothing to do with trading, but they are quite amazing. So, if the vibration of all markets is 6, why does this matter? So the big numbers that Daniel recorded, they create all the basic Daniel Code ratios, but as I just said, the minor time sequence using those same numbers comes out at 6.21. Now, a version of the New York Stock Exchange started in about 1870, long time ago, wasn't it? And in the days of that early continuous trading, the timing fluctuated. It kicked off at 10 a.m. Eastern Time and ended between 2 and 4 p.m. Monday through Saturday. In other words, the markets used to trade, financial markets used to trade for 6 days a week. I'm talking about American markets and the American equities markets. In fact, all of the American financial markets are so huge that they totally dominate all other markets. So trading used to be for 6 days a week. And in 1952, somebody said, why not take the full weekend off? And smart guy. And in September 1952, the Saturday session is done away with and a half hour is tacked onto the trading days, Monday through Friday, which, of course, we now know we trade 5 days a week. Well, that's where we are, but the point is that markets have a memory. And for that reason, markets have a memory of their own, and having traded for 6 days a week for 160 years or so, that memory persists. So we are never quite sure whether the markets are counting a 6-day or a 5-day cycle. Hence the decimals in our calculations are moot, because our cycle times, our base cycle times, are not so accurate that it makes it necessary to use the decimals. And you can see The calculation for minor market time comes out at 6.21. The other DC ratios also have a decimal in them, 29.6, 59.3, and so on. But because we are never sure if the market is tracking a 5-day or a 6-day cycle as its base, it makes the fact that we can't be so accurate as to use decimals. So we simply ignore the decimals. It works perfectly fine. So one of the better trading programs I'm aware of has returned 72% year to date on the S&P. It's an interesting program. It runs on a risk of about $35,000 and it has drawdowns in excess of 50%. Now, we don't use anything like that. I've always maintained that one of the great lies that people say is, oh, yes, I can handle a drawdown. Well, let me tell you, you can't, nor can anyone else. So the guys who are trading this particular program and facing up to those sorts of drawdowns, good for them. If you have a look simply at the February 2020 flash crash, the shortest bear market in history, our TO3 Plus and 6S programs made around $45,000 in just the two major trades. So most brokers recommend an account of twice margin, so that gave a notional return of about 170% on that sized account, twice margin, in 20 days. So I'm not comparing the programs. Many decent folks have very, very good trading ideas, a lot of very smart people in this business, but I am highlighting the fact that drawdowns matter. And that's been one of the big battles, moving from Slo Mo to Slo MOC. So what's this all about? What am I talking about? Well, we've been running what I call Slo Mo, meaning slow motion. If you're used to trading daily bars as I am, the longer term cycles seem like slow motion, and I really wanted to find a program or develop a program that was Slo MOC. In other words, it worked entirely on market on close, and that's what I'm showing you today. There's a lot of demand for that, and you know, it's kind of interesting. We've got a number of clients. Greg from Colorado Springs is one of them. Greg from California is another one of them. We've got a number of clients who are actually money managers, and they're trading portfolios of shares, but they're very interested in futures. And they have asked me, a number of people have asked me over the years, can't you create a program where you only have to look at the market once a day to get the signal for what to do next? And that's been an aim of mine for years and years, and I haven't had a whole lot of success with it. And that's because I'm not open to the massive drawdown that the vast majority of those programs will create. It just it doesn't appeal to me personally, or for my own trading, or for clients trading. So I haven't been able to go down that route. And what I've been doing is I've been on the search for a market that you could just look at the close every day, and it would tell you what your orders were for the next day. And I think we've got that. If not, we're very close to it. So the basic theory of trading is that for continuous trading I'm talking about, during the day the market receives and processes all news that affects the commodity or the market being traded, and it acts as either a forecasting machine or a discounting machine. That's a topic that's of great interest. Excuse me. That's a topic that's of great interest to traders and academics in particular, who like to waffle on about markets without really having much of an understanding of what makes markets turn. But that's the basis of market theory, that the market varies its price. It'll search out support and resistance, that's reflected from the highs and lows intraday, and that at the end of the day, everything that's known to the market has been diluted and disseminated through the price. So the close, the daily close, is the accurate valuation of the market at that time. So daily highs and lows represent, as I said, that testing of new price levels, but the final determination of the market's worth as being set by the market is the close. And that's why it's so interesting to try and deliver a product that works on Slo MOC, MOC, market on close is what that stands for. So this is a development from what we've been doing previously, and what you're looking at now is Slo Mo, and this is a daily chart of the S&P back to March 2019, and you can see the results. It's quite extraordinary, extraordinarily good. The biggest drawdown is about $6,000, and which is about 50%, or a little less of the current margin on the S&P. But there's a problem with this model. It's biased, and it's biased because it's working in a known bull market. Now, to me, that makes the product totally unacceptable, because it leads us to this idea of having a narrative. People who trade stocks and shares, or invest in stocks, I should say, the vast majority of professional money managers work on a narrative. They get the narrative from whomever their advisors are, one of the JP Morgans, Goldman Sachs, a whole lot of smaller ones who are just as good, if not better. And they have a narrative, and it's the narrative that defines how they trade. Well, to me, the narrative is simply a new introduced form of bias. And we all have enough bias in our trading already. We are biased. Talking yesterday to Dan, who is probably with us. Let me have a quick look, from Seattle, who's oh boy, a lot of people have come in since I started. Nice to have you all with us, folks. If I haven't already welcomed you, it's great to have all of you. So Dan is not with us today. Neil's arrived from Chinchilla. Good on you, mate. Good to have you with us. Hope your training's fantastic. Let's see, I'm going through some of these people who arrived a little bit later. No, he's not with us, but he's talking to me about all of the. He's just done a Daniel Code tutorial. Actually, he's done one. He did one back, I think, in probably 2011 or maybe 2012. Dan and Dean both, you've heard me talk about Dean's fabulous trading results from his Daniel Code time tutorial. Anyway, this gentleman, Dan, he's an engineer, very clever guy, very methodical. His problem is his head gets in the way. And Greg from Colorado Springs, who's with us today, he's going to start a tutorial next week. One of the questions he asked me in an email today is, apart from my own biases, what are the risks in trading? And truthfully, the biggest risk is your head, as it is my head. We all have biases, whether that bias comes from observed history or from something entirely different is immaterial. The fact is we have biases, and to be a very, very good trader, you need to be absolutely clear of bias. We want to get you to be a mechanical trader, so you can execute the same trade, pull the trigger the same way every time. Just as a pro golfer, you'll see they'll get a bucket of balls and they'll hit 50 balls with one club onto the green, perhaps. They're not actually trying to see how close they can get to potting it in the hole. They're trying to see how closely they can group the shot, so that every time they use that club, they are endeavoring to execute exactly the same swing, so that they'll get a known result from the use of that club. And trading's the same way. I'm trying to get you to get rid of your biases, to get rid of your belief. You've heard me talk in the past about writing backwards on a piece of tape, "I am not God," sticking it on your forehead, so every time you look in the mirror, it will remind you that we don't have foreknowledge. We don't know what the markets are going to do tomorrow. And if anybody tells you they do, run for your life. So anyway, this is Slo Mo, which we've been using now for quite a long time. And it's very, very good. But the problem is it is biased towards a bull market. That got pretty scary in that big February rundown. Was there enough to change that bias? If I had long enough to think about it, it probably was. But that highlights the issue that if you have to have a narrative, if you have to have your indicators biased directionally for any market, you're in trouble. You must be able to execute to a plan that is simply void of any narrative. Was the word I was looking for. Okay, let's move on. So this was a great idea. It has worked terrifically well because, hey, we've been in the biggest bull market in history, and this program was biased to the bull market. So to me, that's not acceptable. Let's have a look at something else we've worked with this. Now, this was the 3-day version, and this is working off a really simple idea that each of these bars are 3 days. Now, remember that your chart, if you create a 3-day chart, will be slightly different to my chart, and that's because depending on where your data starts, and most of these programs have slightly different start dates for their data, it will count the 3 days from there. So yours will be slightly different, but not materially so. So have a look at this. This is basically running from January 2019 through to date, and it's 21,000, 29,000, 50 odd thousand plus. And what are we looking at in time? We're getting very close to 2 years. Is that a great result? For most people, I guess they'd say, average 25,000 a year over 2 years on a 13,000 margin. Pretty fantastic. But I can't bring myself to that belief because look what happened in the flash crash in February this year. That big trade down, here it is, you're looking at it now, on the fourth seal, on the our TO3 signals, our TO3 plus signals, and 6S program, those two first legs down independently made $43,000 in 2 trades. So, I mean, what you've been looking at just misses that. Of course, it made money on the way up as well, which is, excuse me, not quite so dramatic. But if you didn't get that, in my view, and I know a lot of people didn't get that big sell-off, but in my view, if you didn't get that sell-off, honestly, you've got to have the patience of Job. To me, it would be totally unacceptable if I was running a program where that happened and I didn't make money out of it. I'd be cutting my throat, and I expect that for most traders that's true. So that's the problem. It looked very good, but it's not really acceptable because with the levels of volatility we're having, you're missing out on just so much money. Now, what's interesting is I think Morningstar came out and said that most hedge funds, the 2 and 20 Brigade, can't make money when there's high volatility. And to me, that's absolutely staggering, because we make the big money when there is volatility. In fact, the more volatility, the better. And if anything, the Daniel Code numbers and ratios get even more accurate as volatility goes up. So you see some of these big bars. I mean, they're like they're massive daily bars. They're just absolutely huge. They're $7,000, $8,000, $9,000 intraday, extraordinary, and more. You've got to be able to live with that, and you've got to have a program that lives with that. So you're prepared to say that was a good program we've just been looking at? Looked pretty good over a long period of time, which is how professional investors rate their programs. Me personally, I couldn't wear it. If there was those giant big moves down there and I didn't get them, I'd be cutting my throat about things. So let's move on. So that's interesting. So this is the VIX showing you the volatility, which you can see went absolutely nuts in that little sell-off in February. 85, I mean, unheard of. That's the all-time high, as far as I'm aware, of the VIX index. Now, the VIX index is often referred to as the fear index. It's really a measure of volatility, market volatility, and there are specific versions of that for all of the major markets. I've just used the general one. This is for the S&P, which is I was going to say the most important of the equity indices, but I guess I'm being a bit old-fashioned. The Nasdaq right now is a pretty exciting trading vehicle, as you saw from our last tutorial. Okay, so let's get rid of the big hump and just have a look what's been going on the whole of this year. 40s in January, 40s, just under 40s in September. Where are we now? On the way down. Where have we been a few weeks ago? 42. Massive, massive levels of volatility. Is that going to quieten down? I don't think so. I think there's a ton of volatility to come, because I think there's going to be so much money thrown at the US economy by the Biden government, and the levels of debt all over the world are just way outside any parameter of responsible, prudent management. And they're also way outside any ideas of historic measurement. The money that's been thrown at the problems caused by COVID, and that had to be done. I'm not being critical of it. Governments had to step up, and they've had to, if they've created lockdowns and what have you, they've had to ameliorate that risk, which they've done. But the debt is just massive, and in the US, I mean, numbers you can't even think about. But someday that's going to become an issue. Traditionally, during all of my trading career, debt has been a big concern. The bond vigilantes, as they used to be called. All of a sudden, no one cares about debt. But the fear's gone away, but the debt hasn't gone away. It's still there, and it's going to come back to bite us at some time. So I've just interspersed those comments, but going back to the previous chart I showed you, that was tracking indicators based off bar highs and lows. This version is actually the same chart, but it's now tracking indicators based on the close only. And as you can see, it's an absolute failure. It actually lost money on that big February sell-off. It didn't get any of the 40-odd thousand that I'm talking about for the first two big trades. In fact, it lost money on the whole application. So once you take these indicators and transfer them from true highs, true lows to close only, you're actually shrinking that parameter. You're shrinking the distance between the blue line and the red line, which is, where Gann's tunnel through the air came from, the most infantile book I've ever read. But let me preface that by saying I know a number of people who thought it was absolutely wonderful. So if you're a Gann fan, tunnel through the air at your own cost, please. I found it very hard to even finish reading it, but I was a Gann fan in the day. I can tell you, I was a Gann fanatic for about 12 years. Sad, isn't it? Anyway, that's what happens when you don't know things. You tend to believe what other people say, and in trading, that's not usually wise. So I've taken that same idea and I've just put it on the gold chart for you to have a look. It's totally hopeless, absolutely hopeless. Yes, there's one or two big wins there, but the losses you couldn't stand it. 7,000, 7,000, and 20,000 back to back. The end of the world, not possible. You just simply can't rationalize it. So what we need, and what I've found, I've just given you, believe it or not, the short version of this whole exercise. I've come to the conclusion that we actually need to use two different time frames. So, everything that we use in trading, in my view, must be market generated. We can't arbitrarily impose our views on the market. That's why the Daniel Code ratios are so great. All the retracements and extensions on the members' charts that you see every day, or you should be seeing every day, comes from the market. They're not numbers I pluck out of the air. They're a function. They're a fractal of market moves. And I believe that's the only way to run analysis. Departing from that, Sim, do I think volatility is going up again soon? I sure do. At the moment, markets are essentially consolidating, talking about the big equities now, consolidating, marking time, trying to get some clarity on the outcome of the election. I think as this whole process going forward unfolds, and as what seems likely at the moment is there'll be a new Biden administration, and you only think the Republicans know how to spend money. The Democrats invented that. Republicans historically have been very conservative about spending money. That hasn't been the case under the Trump presidency so much, but the Democrats, they are the world champions at swooshing it down a drain. I changed the wording of that expression in deference to our guests, but you know what I mean. If we start using a market-generated stop, that's what this chart is you're looking at here, which is the outcome of my deliberations to date and what I've been talking to you about and trying to get you to come along on the journey with me. This is the S&P for the whole of the year. No, it's not from February. I did have it on here for the whole of the year, but the bars are just so small you can't see it. But from February, we had a nice bull market into February anyway, so you can get an estimate of the results. We made some money on the February flash crash. Nothing exciting, but it was good money all the same. 9,500 and 5,000 in those two rundowns. The big loss is that initial rally from the low in early April, which, looking at the Daniel Code trades that we've been doing and the previous webinars, we picked that high to the day on the time cycles and the price cycles. It's a result of TO3 plus and 6S sell orders. The absolute low of that whole rally, the same thing. We picked it to the day and the price level. I've talked about that in previous webinars. But this program doesn't get them, but there's some sacrifice the minute you go away from actively trading daily bars. But this is working just off the close. But by using a secondary time cycle as our stop loss manager, we finish up getting a great result. There's $42,000 from February the 20th to date. which is, I guess that's 9 months, pretty extraordinary. So I'm really happy with that. I'm going to expand and develop this concept, and I'm going to look forward to talking to you more about it, because I think it has real potential. One of the questions is, why do people want to trade this way? Why don't they want to just trade daily bars? Well, I trade daily bars, and I teach you trading daily bars. That's what the Daniel Code website is primarily about, because to my knowledge, it's the most profitable way to trade. And in trading, we're always chasing profits. That's our business. So why would you want to go away from that to something that's not quite as, doesn't generate quite the same return? Well, it's like the swing, isn't it? It's got ups and downs. You don't get every penny of the moves in the big moves, the high volatility moves, but there've been high volatility I showed you all the way through this year. And that was one of the previous charts. And if you ignore the flash crash, as I call it, in February, before the Fed hopped in to make sure that market didn't go down any further or any longer, you can see that this particular method of trading works very, very well. And there are a lot of people who just don't feel comfortable with the noise around trading daily bars, the every day on the job, the observance of markets on a tight time frame. This program that I'm showing you now, this still works off daily bars, but you don't have to look at it until after the close. And you only have to look at it one day, one trade at a time, one item to look at, and that's the close only. And by using this two market time cycles that I've shown you here, we get the benefit of the decent moves that go on and on. We do very, very well out of those. And we're not really savaged too much by the whiplash. So the biggest loss here in this 10-month period in a very, very dynamic and highly volatile market is $6,100. And I think that's pretty acceptable. That's going to be about 23% on an average size account of twice market value. So, folks, if you're in the wiki camp, you will believe that Daniel never existed. But you're not irredeemably lost. There's hope. You can take the very scientific view that a synodic month is 29.53 days. And by using its fractal and extensions, you will find redemption and true market knowledge. And you can just check Wiki to find out what a synodic month is and what it all means. But there's a purely science-driven approach for you. Doesn't use the B word or the G word or the J word. None of them. Nothing to upset you. Just pure science. Take that synodic month and you'll finish up getting exactly the same answers as the Daniel Code gave me. I guess regrettably 8 or 9 years before I'd ever heard of a synodic month. And of course, the interesting thing for the heathens among us, Daniel told us exactly the same thing 2,600 years ago. So that's it for today, folks. I've gone over time by a few minutes. If you want to be a super trader, email me, jneedham@thedanielcode.com. Let me have your phone number, country and location, so I don't call you in the middle of the night. And I'll be happy to call you and discuss your trading and how I can take you from whatever level you're at now, including a complete and utter novice who's never seen a chart. I can take you to a better level. So I say, if you're new to this business, I will teach you how. If you're already a competent trader, I will make you better. So up to you. Please send me an email, jneedham@thedanielcode.com. Let me know that you're interested in learning to trade the Daniel Code way, which is, to my knowledge, the most profitable program there is. and I will be happy to assist you. For those of you who are subscribed to our DC Website Pro, that's the $249 a month option, you're entitled to 2 free success markets to go with that. Just let Terry know what market you're interested in and he'll get you switched on. And remember, all Daniel Code signals are conditional until they are elected, and we show you the price at which trades will be or are elected. You see that at the trade program on the website and the success signals. Okay, so the business of trading, as I always say, is actually not about being right. It's it's about making money, and that's what we continue to do so well. Free trials here, folks. If you haven't already, you're welcome to have a free trial of everything at the Daniel Code, including the 4th seal, success, TO3, plus the whole 10 yards. Go to our website, www.thedanielcode.com. Click on the free trial button that's there. Just hit the register button. Any issues, contact Terry at support@thedanielcode.com, and he'll make sure that your applications are all working. Finally, let me again show you our disclaimers, and it is very, very easy to lose money trading. I beg and implore you, please do not risk real money until you are absolutely confident that you are a competent trader. With that note, folks, I thank you very much for being with us today. For me, it's Friday. It's past midday, and I've got my orders on for tonight's trade, so I'm off the clock, and I hope you enjoy your weekend and stay safe. Okay, Guy, glad you enjoyed it. Adrian, thank you. Murph, my friend, of course. Akshay, elephant in the room is debt. Well, it'll happen soon enough. I'll talk more about that as we progress, Akshay. Hank, have a good day. Don't have too many Bloody Marys. Good on you. Neil, glad you enjoyed it, mate. And Peter, of course. Thanks, and I look forward to hearing from you, Peter, for our next trading session. So that's us for the time being, folks. Again, thank you for being with us. And I hope some of that has prompted the grey matter for you to think more about it all. All the best for now. Bye-bye.